Hello, Xcellence family. I'm Kristina Suengas, agent concierge for both Xcellence Mortgage and Xcellence Title. I have the distinct privilege of catching up with Paul Sardone, our title attorney at Xcellence Title. Good morning, Paul. How are you today?
Hey, good morning, Kristina. Doing good. How about yourself?
Good, good. So far, the week has gotten off to a great start. I wanted to see if you had a moment to talk about seller financing. We've seen it come up a few times, more often than not, in today's mortgage environment. If financing
Yeah,
falls through and you have a
right,
willing seller,
right.
there's another option.
Yeah, yeah. So this is becoming more and more common because, as you said, a lot of properties have had a tremendous increase in equity. It's not just properties that are paid off anymore, but there's properties where sellers are going to be cashing out a significant amount of money, and buyers are finding it hard to obtain financing, and also rates are pretty high. So sometimes, it's become more and more common now that rates are not 3% anymore, that buyers might say like, well, I can deal with the bank and get this rate, or I can pay a little bit more and just, seller financing me will make this closing a lot smoother. So the seller financing is an option. It's typically based just on a percentage. The buyer will bring a down payment, which will be either proceeds to the seller or enough to pay off any existing debt obligations on the property, any liens and mortgages. And then from the seller's proceeds, what they do instead of taking the cash, maybe they don't need it, but they'd rather get a return on it. So they will lend it as a mortgage to the buyer, to be able to complete the purchase. So an example would be a $500,000 house. I'm selling it to you. You're having a hard time getting a loan, but you do have a 20% down payment, let's say. I don't have any debt on the property. So I'd say, okay, well, I'll lend you the money, you give me the down payment. You put your 20% down, pay the closing costs, and then we'll finance for you, $400,000 at 8% for 2 years or a year. The terms are variable, and you do this until. And then the idea is the buyer gets the property, the seller sells the property as they needed to, and the buyer later down the road. Typically, these are not long-term agreements, although they can be, but typically they're not. And the buyer will then refinance later on, or maybe sell if they're just here temporarily. But the idea, for the most part, what I see is the buyer's like, well, I'll get in the house, start building my equity, and then, down the road when rates drop or whatever, their credit improves, they'll go ahead and refinance. Why is this good for us? It's great for agents. If you find properties where sellers are willing to finance, that makes your pool of buyers now potentially bigger. Obviously, most sellers are not gonna do high loan to value because they're not cashing out anything. They're just basically turning their house into a savings. But in those situations, it can save the deal. Now, what's important also when you're dealing with these, as they become more common, is the seller needs to have, and the buyer, but the seller needs to have somebody who's experienced in preparing loan documents. Because I have seen a lot of cases where a buyer and a seller agree, and then they do the documents, some forms they found online, they might not be valid in Florida, or they might be defective, and now the seller just gave up their house and they have a defective mortgage on it. And if there's any issues down the road and they have to foreclose, they could have problems. So that's one of the things that we do. I've represented a lot of private lenders, sellers, banks. We have the full suite of loan documents, recorded mortgage, title insurance for you as a lender, even though it seems weird because you're the lender now and not as your house, but you still have that to protect you. So there's a whole range of, it's a whole world of finance that opens up on those deals. But if you're working with the right people, it's not too complicated, and it's going to help, our agents close more deals, which is at the end of the day what we want.
Absolutely. And I mean, there is a fee involved in the preparation of this type of seller
Yeah, it's
financing.
typically paid by the borrower.
Mm.
Like any loan, that there's fees incurred. So the sellers won't pay it, but depending on the transaction and the complexity of what their agreement is, it ranges anywhere from like $750 to $1,200, I would say, on the average, for that type of seller finance on a deal. Obviously, preferably we're handling title, so that we issue the title policy to the lender and the regular title policy to the buyer. And then, the hard part becomes for sellers. One thing to consider when, if you have a listing and you're working with a seller who's thinking of doing it, is are they prepared? Do they have counsel? Are they ready in case there are issues down the road? Because it's not just closing, getting the money, and then every month getting a check. There's follow-up. They need to make sure that the buyer who bought their house is paying the taxes, is maintaining insurance, which covers them now as a lender, and the additional named insured on that policy. So like a regular bank, they become. So there's protections for the seller when they're giving financing that are important. There's also the consideration, if you sell the house and you're the lender, how do you want to structure it? So if you die, who's going to take over accepting the mortgage payment? So there's a lot to consider, but it is something we offer and something that we've been doing for a long time and we're very comfortable with. So hopefully we can, use it as a tool for agents and get more deals closed.
Absolutely. We had one not too long ago, and I remember the buyer wanted to extend it. Actually, the seller was agreeing with it past 10 years, which
Yeah,
remember
that's rare.
It was rare.
That's very rare. But I mean, in the case where the seller doesn't need the money and it's a good return, they figure, well, it's doing better here than in the bank. That's the thinking in some people, but most people will sellers, and if the market, especially when the market starts shifting a little bit because there's not as many offers, they become more receptive to it because they're like, well, at least I'm getting this money now. I'm getting rid of the expense of the house, and I'm getting a check every month for a decent amount, and they're typically structured as interest only, 1 to 2 year balloons.
Okay.
So at the end of those 2 years, the seller is basically just deferring receiving their principal, their payout, their proceeds. So they get paid quick. But yeah, there are deals like that one. That one was 10 years, I think they wanted to do, and that's fine. Most sellers don't want to deal with being a lender for 10 years, but in this case, it worked out, but whatever it is, we're available and we can do, all kinds of, it doesn't have to be interest only. It could be an amortized loan. It could be an adjustable loan. I mean, there's no, rules as long as the buyer and the seller are in agreement. If they want to have a prepayment penalty, for example, things you don't really see in conventional financing when it's seller financing are available.
So, I mean, pretty much custom craft a solution.
Yeah.
And I think that was the idea, that it's not lost if you have a seller that's willing to do that type of financing. One other question had come up when we were doing that particular deal with the 10 years, and it was around the deed. How does the deed stay? Does it stay in the title of the seller, or does it stay now in the title of the new buyer?
Well, yeah, that was another unique thing with that deal. But, all the ones that we've handled, and most, I would say probably 99% of the transactions in Florida with seller financing, there is a regular deed as any other closing and a mortgage. So, and the mortgage is in favor of the seller. So the seller goes from being the owner of the house to now the mortgage holder. So he's the mortgagor on the property. He holds the lien. We record the lien in public records where the property is located, and they're now the bank, but the title is in the buyer's name. There is another option. It's that where it's basically like the deed gets transferred once the mortgage is paid off. It's a mortgage deed situation. That's not as common. They considered it there, but there's downsides to it as a buyer, especially because then that you're not in the title of the house that you're paying. You don't really get the benefits for income taxes because you're not really the holder of it. There's also liability issues. The seller is technically still in title, so if somebody sues that seller because they get in a car accident, for example, then the title to the home could have issues. So it's typically better to avoid it. Some states, that's the way they do things. Here in Florida, it's typically a deed. You get the deed from day one, like you do with any other bank as a buyer, and then there's a lien on your property for that mortgage. So that's how I prefer to handle it, and that's how I advise. But if somebody's dead set on doing it the other way, we can make it happen too.
So there are options. No, but I would think as the buyer too, you want to have it in your name.
Yeah, you want the property in your name. You want to claim your homestead exemption. You want to report the interest that you paid to the IRS and stuff like that. And maybe you still can you have to talk to your accountant on that, but you definitely can't get homestead exemption if it's not in your name. So property taxes are going to fluctuate. It's just not ideal.
Well, we appreciate all that information. There's a bunch of information. Paul has many ideas. If you have clients that need help, support, we are here to support you on the title front, and we are available. Paul, I appreciate the time you took with us this morning to talk about
anytime.
Financing options, which are available. So there are, different opportunities for clients that may not seek traditional financing. I encourage you, as always, please don't hesitate to reach out. You have Paul and I here to support you. The entire title team is here to help. You could call us directly at 305-595-7355, the option for title, or you can even send us an email to hello@xcellencetitle.com. We look forward to hearing from you. We wish you a fabulous rest of your week. Thank you, Paul. Thank you, everybody.
Thank you.
Take care. Bye.